Hello traders, and welcome to this new daily market update. So today, this is going to be different from the other days because I'm going to publish 10 videos. I'm not going to publish any video tomorrow because I need to rest a bit because I've been, consistently producing 5 videos per day. But since, markets are not going to move during the weekend, or at least this is what we know. I am going to do all the different the different analysis that I'm going to do. I'm going to do them all today. Okay, so today I'm going to start with indices, and then I'm going to also discuss a couple of forex pairs. Okay, so let's get started. So here we have the Nifty, which is the Indian index. The Indian index is it's an index that is very interesting because India is a country that is growing fast, and it's an emerging market, and usually you have very good volatility, and you can day trade it. So let's see what we have. Well, right now what I would suggest you to do, we have a breakout. We don't have a breakout yet, which is a good sign, because it means that we still have a trade opportunity in the making. What I'm talking about is that we don't have a breakout. We had a fake breakout here, and we had a second fake breakout here. Okay, so we had two fake breakouts, which means we are getting close to I call it the right breakout, which is the breakout that is going to send price either lower or higher. But given the shape that we have right now, I think that downside is more likely. So I'm just going to show you the potential trade that you might have here. Of course, any trade that I'm giving you is a trade that will happen when we have a confirmation. The trade is going to trigger once confirmation is there, not otherwise. Okay. So I'm going to show you the trade setup that you should be looking at. Okay, we have a correction here. We have a correction, which is also a correction that is we have a wedge, in fact, and this is a corrective wedge. This is easy to see, and this is non-ambiguous, right? So this is non-ambiguous. This is a wedge. This is a corrective wedge. And before that wedge, we had an impulse, which is composed of a first leg correction and then a second impulse. But still this is an impulse, and this is clearly a correction. So what I will be looking for a second impulse. I don't know if price is going to tag the low or not, but at least for the next couple of days, the most likely scenario that we might have is to have price moving downside a little bit more. Of course, here we don't have a real correction, or support. So I would expect price to go even lower and maybe to tag this region. Let's check using the Fibonacci retrace extension levels, which would give us, so we use the extension levels with the first impulse always. So the extension levels are used with the first impulse, like here, like you see it. The first impulse is the most accurate one to give us the accurate levels. So right now, as you can see, it's so accurate that we get almost at the same level as when using the measured move technique, or continuation. So right now you should focus on breaking. So I'll give you the levels. so we don't make this video too long. First of all, we need to have a breakout of this level, this one, okay, purple line, and then we must have a breakout of this second level, okay. But day trading, you can work on this first one, so the purple line breakout, and then you can go for the second level, okay. If you have any questions, and if you need, like more information, you can just, get in touch with me by email. I'm also, like providing all this information for free, and I'm going to be doing it, forever, or as long as I'm alive, or as long as, like I'm able to speak or to do it. But anyways, I'm going to be continuing doing this, like this kind of, this kind of videos all the time. So subscribe if this is the first time that you are watching these videos. I also try, like to give you trade opportunities and trade setups with the least amount of risk, so I try to give you, like opportunities that are not risky, and where you can easily, like see if you are right or wrong. Like here, you would place your stop loss just like above, because if it closes again above, it means that price is not going, like to go further. Because really, a breakout of this level, any breakout of this level this time, because it will be the third time that we are going to break out of this range, means that price momentum is going very likely to be there, much more likely than when it tried to break it for the first time or the second time. So the third time is a high probability kind of trade. Remember that. Okay, thank you, and I will be back with more videos. As I said, I still have 9 videos to do for today, and you can check them out after having checked this video. I just want to make short videos, so like you focus on, like the financial instruments that you are trading. Okay, thank you.